You're listening to Seattle Real Estate Podcast.
Mr. Dan Chapman.
Yes.
Fairway Independent Mortgage. Welcome.
Thanks for having me.
We are doing another predictions for 2025.
2025, wild.
Yeah. All of 2024 was survive until 25.
Yes. Survive until 25.
What is 2025 going to look like? I mean,
Yeah.
we're going to talk about that. We're going to get into, I've got an article here that kind of gives some broad strokes, and it is what to watch for in the 2025 housing market predictions.
Okay.
Let's go through that.
Yep.
And we'll talk about not only, what real estate's going to do, but interest rates and supply and demand and all that good stuff. So thanks for being here. This will be good because it's always good to hear from a mortgage guy.
Sure.
How has your business been?
This year started out very challenging. The first quarter of mortgage originations was really slow. And then it's picked up steam. It got really busy from like July through September.
Yeah.
And then rates kind of went back up real quick before the election in October. October was a little slow, but November, December for me, it was rolling. November, December.
Okay. So you had some stuff through your pipeline.
Yeah.
That carried you through.
Yeah. So I'm kind of hitting I kind of have a goal before the year. And I didn't think I was going to make it this year, but I made it.
Okay.
I made it already. So
you've been in business a long time.
Yeah.
So you've got a lot of folks to draw from.
Yeah.
There's a lot of people in the mortgage industry. There's a lot of real estate brokers who are on the serious struggle bus.
Oh, for sure.
Yeah.
I know a lot of realtors that have really struggled. Loan officers too, but realtors, if you're, I think the average realtor does like 3 or 4 deals a year.
Right.
So if you're not, if you're in the top 20%.
And they're doing none if they're in that.
Yeah. Right.
Yeah.
That's
they're
right.
doing none.
They're all working other jobs.
Yeah.
So if you're in the top 20%, maybe you're doing 10, 15 deals a year, but those have skinnied down. Especially on the buyer side, there's been more listings, but on the buyer side.
Right. Yeah. On the appraisal side, our volume is down 70, 80% just because refinances.
Yeah. They're super slow.
It's just not there.
This was a slow year of refis. I did a few more this year than last year, but and I expect 2025 will definitely be maybe 25% more.
More, but not pre-pandemic levels.
No.
By any means.
No.
We're just not there yet with mortgage rates. And we'll talk about mortgage rates as well.
Yep.
Let's jump on into this. All right. So first prediction is home price growth will return to pre-pandemic levels nationally about 4%.
Okay.
Here in Seattle, I'm thinking it's going to be more like 6%.
Okay.
What do you think? What would you think?
I mean, nationally, 4% sounds about right based on what I've been seeing and reading where we think rates are going to go. And, last couple of years were pretty slow year, especially 2023, really slow, for business, for real estate and mortgages. And then 2024, a little better. So I think 4% nationally, maybe 5%. But I think in the Seattle market, it's a broad market, right? You got Renton, you got Kent, you got Linwood, but then you have Kirkland, Bellevue, Redmond, Seattle.
You got Tacoma.
Yeah. So, but if you think of King County for the most part, maybe South Snohomish County, I think, 6 to 7% is probably.
And some of those cities will have significantly more than that.
Yeah.
The east side here.
Bellevue.
Kirkland, Redmond.
They're building a lot. Builders are looking for land in Kirkland, Bellevue, certain areas of Seattle, a
lot of Seattle,
Madison Park, Ballard, places like that, Green Lake,
but
West Seattle.
But there's hardly any inventory of available land.
No.
And they're just doing tear down after tear down. So those areas, the new construction in Seattle has been a consistent blow and go. They've been going.
They're making money.
Yeah. That's an industry. That's the one industry that I would say I've got a couple of brokers that have a big team in Seattle, and they are going.
Yeah. I'd like to do one myself. I'd like to do a remodel where I add a DADU and an ADU. I'd love to do it because it's just hard to get, right? Yeah. Those deals are hard to come by.
Those deals are hard to get.
If I could get my hands on one, I'd do it.
Because everybody's looking for those.
Yeah. Because I have the connections, with the lending, private lending and, the construction. So I could do it, but it's just getting it.
Everybody wants them, and that's why that market is doing so well.
Totally.
So, Okay. So home prices, I mean, we're not looking with interest rates the way that they are right now. We're just not seeing a bunch of appreciation.
Yeah.
Because you've got people that are still having those mortgage rates of 2.75%, 3% in their head. And they're pre-qualifying with guys like you.
Right.
At 6.5%, 7%.
Yeah.
And those numbers are wildly disparate. Massively.
Yeah. Yeah. There's still a lot of people that don't want to sell, right? So inventory is an issue. If you're sitting at 2.75 or 3%, I get these calls all the time. Oh man, Dan, we need a bigger house. Our kids are growing up. We need another bedroom. I really hate to leave this mortgage. Should I sell it or rent it? Well, a lot of times they got to sell it because they got $500,000 in equity. So,
and they need that for the next one.
Especially with rates of 6.5.
Right.
So that's the big problem. Like, oh, I'd love to keep it as a rental. Not everybody can do that,
Right.
They need the money.
They need the money. Yeah. And what's so funny is that historically, when I first started doing this, interest rates, I think, were at 14, 15%.
Oh.
Yeah. So when they came down to 12, we had a massive refinance boom.
That's crazy.
When they dipped down to 10, huge. When they went single digits, massive amount of appraisal orders because everybody came through in the refinance.
Yeah.
We got to literally know people because you could order appraisals from whomever you wanted.
Right.
Now we're doing your house for the third time this year.
Yeah. I remember before the appraisal rules, we could, shoot you an email or whatever and say, hey, what do you think of value on this place? I'm doing a refi. Is it worth 500 or what do you think? And you give us an idea.
Yeah.
And we'd order the appraisal.
Tee it up and away we'd go. That was back when things made sense.
Yeah. That was before 2008.
Yeah. Before the 2009. Okay. Second prediction is flattening rents with more room to negotiate. So rents have come down, but it's kind of specific because like the article says, for instance, Austin, Texas, which is the epicenter of multifamily construction, meaning a lot of new supply into the city's rental market, means that rent prices fell 2.9% from a year ago. But in supply-constrained metropolitan markets like we're in here in Seattle, DC, New York are experiencing high rent growth at 5% annually.
Still 5% increase in this market?
Yeah, in this market.
Okay. Yeah, that's tough, especially after the huge rise we had.
Massive rise. So that's why I think so many people are feeling the crunch, not only from inflation, but from their rent and from everything. I just went and got my new tires put on my car. Yeah. It was $1,200 for 4 new tires at Les Schwab.
And we're not talking a big truck.
No, we're talking a 2014 Jeep Grand Cherokee.
Yeah. Yeah. With
$100,000
probably was
on it.
$800 3 years ago.
Yeah.
Yeah.
It's 30-something% more.
Yeah. Yeah. Rents, they're expected to soften and to come down and they just haven't done it a lot yet. It doesn't seem, they have in certain areas. But in Seattle, it doesn't seem like it's really softened much.
And one of those factors that I keep reading about Seattle is that we just don't have the dirt to build the new construction apartments. And we've gone through a massive construction phase. Now we're towards the end of that. There's not a ton of stuff coming online.
Yeah.
So that's what's kind of holding, rental prices up.
Yeah.
Is that you don't have a ton of supply and yet you still got great demand because who can afford a home in the Seattle market?
Oh yeah. Just rent prices. If you think of rent prices in say 2019 compared to now.
Oh, night and day.
It's like, I don't know what the run up is percentage wise, but it's got to be at least 35%.
Yeah. Yeah. If not, maybe more.
Maybe 50%.
Yeah. Depending on where you are. Yeah. And have wages, gone up by that amount?
The only thing is like, I do some loans for some landlords and some investors and I'm looking at like I did one the other day for the guy. He has a $3 million house in the Bay Area. And I was,
which is a teardown.
Yeah, exactly. Yeah. It's like in Los Gatos or something, but it's $3 million, just this little house.
It's almost in Oakland.
Yeah. It's just this little house. And I was like, do you know what are you charging this guy rent? He's like, oh, it's 35. I was like, you can get like 55, 60 grand for in that area. He's like, I know, Dan, I need to raise it. I feel bad. He's just so nice and just a really nice. I was like, well, you can only raise it a certain amount in California. They have rules on that.
Right.
But he could raise it.
It's capped.
He could raise it 500. Yeah. It's capped at, per year, I think.
Yeah.
Certain percentage.
Which is insane.
Yeah.
When you're capping stuff.
Yeah.
That's the whole price gouging thing.
Right.
you can't regulate that.
Yeah.
You start to do that and those prices are just going to go through.
Right. But there's these, what I'm saying is there's these landlords out there that have had these renters forever. And those people are getting deals. Yeah. So they should be really happy if they can stay in that, if they want to continue to be a renter.
And that's why I think a lot of folks aren't going to step up into that mortgage because they look at the sticker shock of 6.5%. Yeah. Let's talk about where mortgage rates are right now today.
Mortgage rates, regular conventional rates, which nationally is the new limits just came out for 2025, 806,500 or less.
Okay.
Those rates, depending on whether you're a first time home buyer or whatnot, are in that 6.375 to 6.625. So say 6.5.
Mid sixes.
Yep. That's where they're at.
Okay.
Today.
That's for conforming non-jumbo.
That's right. And then there's high balance, which in Seattle is now in the Seattle market is up to over $1 million, $1,037,300. $1,037,300.
It's over $1 million?
Yes. So high balance just went up like 2 weeks ago or maybe 10 days ago.
So explain that just real quick.
So high balance conventional is if you live in an expensive market like Seattle, San Francisco, LA, they have different limits because of the cost of living there. And so the regular conventional limit, while it's 806,500 anywhere in the United States, in Seattle market, it's $1,037,300. And so those rates are about a quarter point higher than regular conventional rates.
Because they're slightly more risk.
Yeah. So about 6.75 roughly.
Okay.
Yeah. Yeah. But you can buy a house with 5% down. So you can buy a house for $1.1 million with 5% down.
What are the payments on that though?
Yeah.
I mean, yeah. Are they 15 grand? Are they 10 grand?
No, they're a lot though.
They're a lot. They're a lot.
And then jumbo rates are sitting, around 6.5, 6.75 in there.
Okay. A little bit more the conventional, but that's normal.
Yep.
Under 7. Now we did bump up over 7 right after the election, right?
Yeah. A little bit before, a little bit after.
Yeah. Because the market went crazy when Trump won.
Yeah. The bond market they took money out of that, put it in the stock market. Crypto went crazy, as you know.
Crypto went nuts.
Bitcoin's now over.
I mean, Haktua girl had a crypto coin.
Huh?
Yeah.
Yeah.
I mean,
that's funny.
When that happens, that's when you know that is a crazy market.
I just know I didn't buy enough.
Yeah.
I bought some 4 years ago, but not even one coin. So.
Yeah. I bought some and I got out after it went back up.
It's not for everybody.
No, it's so volatile. Okay. Prediction number 3, a bumpy and volatile year for mortgage rates.
Yeah.
We're going to predict, we don't really know what rates are going to do, but general consensus here is mortgage rates in the 6% range, meaning going from 6 up to, possibly 7. And you've got a handful of predictions here. Let's read those.
Yeah, this is today from an email I got from Mortgage Nuggets. Redfin estimates, which I believe is high at 6.8. CoreLogic, 6.5. National Association of Realtors is the lowest at 5.8%. And Realtor.com's at 6.20. Fannie Mae's at 6.30. So, Mortgage Brokers Association, 6.40. Those are what they're predicting rates, but so nobody really knows. They're all the way from 5.8 to 6.8.
And these are experts.
Yeah. And these are experts. So nobody knows. We can understand why nobody knows because they're so freaking volatile the last 2 years.
Yeah. Here's predictions from Dan and I from one that we shot in late 2023.
If you can afford it, rates are going to go down in 2024, but what they're going to face, depending on when they buy in 2024, is chances are, because of low inventory, it's going to be multiple offers, depending on the area, right? It could be 2 offers, it could be 10 offers, it could be 20 offers. And so prices are going to escalate, in my opinion. And so the sooner, if you're a millennial, the sooner you can get in, like we always, say, you marry the house, not the rate, you can refinance. So if you can afford the payment now, you have the down payment, whether that's 3% on a conventional loan, or if you want to put more down, then I think it's a great time to buy because you're not competing against as many offers, and you might save on a $800,000 home. You might be paying 10% less now.
Right.
So, I mean, what do you think?
So rates are going to come down. Yeah. I think that's what everybody is agreeing on. Rates will come down in 2024. Right. Do they come down enough to justify people getting into a more and more expensive home? Because even though the last 18 months have been slow for you and I as real estate professionals, pricing has still incrementally gone.
Yeah, we haven't seen these big drops that the media says we're going to see. No. It's not happening in the Seattle market.
So yeah, that's another great question that you and I have kind of talked about. Is there going to be a market crash in 2024? Because we've had all this unstable, we've had all this inflation going on.
Yeah.
Do you see that comes out as a question? Hey, I'm going to buy in this year, but is this a year it crashes?
Yeah, I don't see that all happening. Typically, even during recessions, the housing market is strong, with the exception of 2008. Throw that one out. That's a totally different market. The housing market stays strong if there's a strong job market. If there's a strong job market and interest rates come down, which I think we're gonna see a significant drop in interest rates throughout 2024 from where they're at today, which is in the low 7% range. If we see rates go to 6% in 2024, even something with a five in front of it, it's going to be very, very competitive to get into a house in the Seattle market.
Because so many people are going to jump in.
There are thousands upon millions nationwide buyers waiting for rates to drop.
Yep.
And even investors, real estate investors, that, because, I look at buying rental properties once in a while, and if you're a real estate investor and you want to buy a rental property now, depending on the market, for it to cash flow, you got to have a significant down payment.
Massive down payment. Flow. Otherwise, it doesn't work.
Yes, the numbers don't work. I mean, 56% down to get it to cash flow. Well, that's going to change as rates go down. You might not have to put as much down. So you're just going to see every type of buyer getting into the market, besides obviously first-time home buyers, which is the primary buyer that's going to be getting into the market. And then when you have, I've got a ton of clients that tell me, I just can't stomach the payment right now, even though I can get approved for it. I'm going to wait.
So they can afford it. On paper, they can get the mortgage, but they don't want to pull the trigger because relative to what they missed.
They just can't stomach a $5,000 payment when they're paying $3,000 in rent.
How'd we do, Dan?
Yeah.
Probably okay.
Yeah, maybe a C.
Yeah. Be interesting to watch that.
Yeah. So what do you think, what do you think about rates in 2025? I'm talking what do you think the lowest they'll dip to?
I'm a little gun shy because I thought, this is from where I stand owning a real estate brokerage and an appraisal company. We've been slow, or we've been experiencing this slowdown since July of 2022.
That's right.
And that is the longest downturn, and a massive downturn at that, especially on the appraisal end. I mean, you look at 80-90% reduction in your volume, in your gross income.
Yeah.
That's like most of your income going away.
Yeah.
On the Summit side, slightly better, but not great, just because sales haven't been there.
Right.
I thought interest rates would be lower. I thought we'd be in the mid fives by now.
Yeah.
But we just haven't been. And so, mid sixes, okay, all right. But that means we've still got slow market, survive till 25. We're not going to see that. It's going to be, you got to get through 26 or 25 as well.
Yeah. Yeah.
Because we don't have.
That's what it sounds like. I do believe, business wise, I think, obviously you can build your business and grow it, but if you just kind of maintain what you're doing now as a real estate professional and a loan officer, I think that you're going to see an increase, at least from my side, because I'll do a little more refis, I believe, of probably 15 to 20% just because of volumes.
Yeah.
And then there's the fact that you can grow your business. And so, so my goal would be 50% more business in 2025. And I think rates,
that is coming off of some historically low numbers.
Right.
Like your numbers in 2022 and 2023.
From July of 2022 through, the first quarter of 2024.
Yeah.
Not good.
Lights out.
Not good.
Done.
So
somebody turned the switch.
I mean, if we see rates get down to 6% again, which I believe we will, it's going to be very busy.
Now, we had a good sized run up in quarter 3 of 2024.
Right.
When rates bumped down to 5 3/4.
Yeah.
Right.
Yeah.
That was a decent little run.
Sure.
But then that just got when Trump got elected, because the markets reacted so favorably.
For sure. And I think people right now are starting to realize, I did some refinances in September and October, And some of the people missed the boat because and part of it was me. I also thought rates would go lower. So they're like, hey, you don't need to rush into this, but here's where rates are at. Do you want to do it now or do you want to wait? A lot of people said, oh, let's wait.
I'm going to have an opportunity for you in probably 2 or 3 months where rates are going to dip down, and they went the wrong way. Yeah.
And I was wrong. And we all, so I've had those conversations as, hey, listen, now we don't know.
Yeah.
So now if it happens again, do you want to jump on it? And they're like, yeah.
Yeah.
So there's going to be some of that.
Yeah. I think we'll see rates trend down from, call it, mid 6s right now to maybe low 6s, maybe 6.25. Mm-hmm. I don't see them dipping under 6%. But with how things have gone and my predictions have just been off.
Yeah.
Like we don't really know.
We don't.
Because we've never been in a downturn this long since the 80s. And even in the 80s, when we were up at 18%, that didn't last this long.
Yeah.
It just didn't happen. So what we've got going on now is just that, that transient inflation that they told us was just going to be here for a split second.
Yeah.
That's not so transient. It's been here for a long time. And when you put trillions of dollars through the economy, this is where we are.
Yeah.
And people can't afford stuff because inflation has just driven up prices.
It is really bad.
A lot of people struggling out there and they're just having a tough time.
Yep.
So I think for me, a lot of it is kind of a reflection of you got the haves and the have-nots, and people who can buy homes will, because those are still going up, but people are struggling to get into homes.
Yeah.
How many first-time home buyers are you working with like right now?
I would say probably 60% of my business is first-time home buyers right now.
Okay. All right.
A fair amount.
How much sticker shock do they have when they know the payment?
I mean, it's hard. They're going from rent of maybe $2,000 a month to a mortgage of, $3,500 to $4,000 a month.
Doubling.
Or rent from $3,000 a month to a mortgage of $6,000 a month. There's that. There's a lot of that in the sale market.
Yeah.
And in California.
That's why my son keeps saying, Dad, I want to sell my house and rent a 1-bedroom somewhere. That way I don't have to do the maintenance. I don't have to do this. I don't have to do that. I have to just live.
Yeah. Yeah.
It doesn't build up that equity.
No, but if he's got money and he can invest it,
and that's what he's doing.
There's that too.
Yeah. He trades every day.
Yeah. If he's good with his investments.
Yeah.
There's that.
There's that.
Yeah. You can.
But a house in Madison Park, there's that.
Does he own a house in Madison Park? Oh,
yeah. So one of those things.
He's done well then.
Yeah, he has, but he's also got a big mortgage.
Yeah.
And he's like, how much of my life do I want to spend making this mortgage payment, making this mortgage nut? When we don't have huge amounts of appreciation.
Yeah, and if you're not married with kids and stuff, you don't need a 3-bedroom house.
He's got a 2. So,
yeah,
it's kind of what you get. Let's talk about one thing, talking about housing prices going up, going through the roof, because Trump is going to put tariffs in place, number one, and deport millions of people.
Yeah. Yeah.
Millions of people. What would tariffs do? Say a 25% tariff on stuff from Mexico or stuff from Canada, which I don't think will happen.
Right.
I don't think that'll happen, but what would that do to housing prices, do you think, if anything?
I mean, I think Trump's playing poker right now, and he's just he's gonna force these guys to play ball with him.
Yeah. They're playing ball, Dan.
Yeah. So, I mean, what didn't he write a book, The Art of Negotiation or something like that?
Art of the Deal.
Art of the Deal.
Yeah.
So I think that, if it did hold place, products would be more expensive, right? Because they have to pass that on to the U.S. consumer. But I don't think it'll hold, and I don't believe that housing prices are going to go up because of it. I think it's just, it's going to be, and once the market realizes that these tariffs are they're going to go away, because the China and Mexico are going to play ball.
Yeah.
Then I think interest rates will improve a little bit on that.
I actually do too.
So
I do too. This whole thing with Trump and the tariffs, he is just using that as just a big stick.
Yep.
And he's not going to beat him with it.
Right.
But I mean, you got everybody running down to Mar-a-Lago. Just, hey, I know what we said, but could you work with us here?
Yeah.
I mean, you've got all kinds of folks, literally, President of Mexico, President and Prime Minister of Canada. You got Morning Joe from MSNBC. Hey, we need to work with you throughout your administration. We said some bad stuff about you, but.
They called him Hitler.
Well, there's that. There's that. Speaking of Hitler, but not. The other issue is people and a lot of Democratic mayors and governors are absolutely freaking out over Tom Homan coming in and deporting just millions of Americans, of illegals. And I just don't see that as a reality.
No, how can you round up 10 million people or
it's
8
not
million
gonna
people
happen.
Or even 2 million?
Yeah.
Not
going to happen.
No.
And what they're saying is that they're specifically going after the criminals, illegal immigrants that are criminals.
Which they should.
And it's about 1 million or 1.2 million, somewhere in there. And then there's also a bunch of folks that just don't qualify for asylum in the United States.
Yeah.
They're going to go after them as well. How many of those folks are in the construction trades is the real issue, because you deport them and all of a sudden you slow down the supply of building homes and then prices go up. That's the concern. I don't see that as a reality at all.
Yeah, I don't either. I mean, how many of those are actually really making a difference in the construction trade?
Yeah.
That came over possibly in the last 4 years.
Yeah. You're going to have some.
It's got to be super small.
Yeah. You're going to have some.
Yeah. And they're going to, the ones that'll be deported, like you said, are the ones they catch committing a crime.
Yeah.
And they're going to look at them and go, okay.
Or are known convicts.
Yeah.
I mean, they've got 435,000 that are known convicts coming out of, Central and South America.
Right.
They already know.
Right.
So they're going to deport those. And it's going to take forever because it's like herding cats.
Oh, yeah.
I mean, how many, law enforcement officials do you need to go after these folks? You're going to maybe deport 600,000 over the course of 4 years.
Yeah.
Maybe.
Yeah. Right.
So you're not talking 8-10 million people deporting. The mass deportation's not happening, but it's one of the few things that governors and mayors can point to and create some fear in their constituents. And that's what the Democrat states and, cities and counties are doing.
Right.
So, but as far as an impact on the housing, I don't see that as a reality at all.
No, I agree. I don't either.
Just absolutely nonsense.
I think that's smokescreen.
Yeah. And, but this is, this is an NBC article.
Yeah.
And that's what they're going to point at.
That's the drum they're going to beat.
Yeah. That's the drama.
So
the nonsense.
They get proven wrong.
And that's why mainstream media is losing numbers. CNN, MSNBC, The View.
Yeah.
Plummeting numbers. Absolutely plummeting numbers because nobody watches them anymore.
No, they're listening to Joe Rogan and people like that.
100%.
The podcast.
Yeah.
I mean, the podcast market is, you got a podcast.
Yeah.
They got huge ratings,
massive
stuff like that. And it's not just Joe Rogan. There's some other ones too.
Oh yeah. There's a ton.
Yeah.
And a lot of that has to do with people only have so much time to consume news and consume media. They're no longer watching mainstream. So because they're, consuming, other stuff.
I don't even really watch mainstream media.
I do because I think it's fun to see them stumble and fall.
Oh yeah. I like to do that once in a while. I'll turn and watch it. But, the only, mainstream, I guess you could say sort of mainstream is Tucker Carlson. That's the one I check
and
out.
Fox. And Fox's numbers have gone to the moon.
Yes.
They have absolutely gone to the moon.
Yeah. You got the other ones have gone the opposite way.
Yeah. They've absolutely tanked.
Fox, Newsmax kind of mainstream, but not everybody can watch them. So.
Yeah. CNN has been one of the biggest ones to absolutely fall. They're literally cutting folks from CNN and MSNBC. Right. They're just cutting folks because they can't afford to pay them because they don't have the income stream from revenue because they don't have the viewership anymore.
Right.
It's all, toast, which leads me to my last point here. Climate risks will bake into home prices.
Climate risk?
Yeah.
Like, give me an example, like the hurricanes or
the risk of extreme weather and natural disasters may anchor down home prices or slow down price growth in areas like coastal Florida, California, and parts of Texas. There are high risks of hurricanes, wildfires, or other disasters, Redfin experts. I mean, that is just some real nonsense. That has been happening, and insurance companies have been pulling out of California.
Well, that's the thing.
In droves.
Yeah, like California, the insurance is insane. Florida.
If you can get it.
My brother-in-law owns a couple properties in Florida.
Yeah.
One of them, he's had trouble selling. He moved to Nashville, and one of them he's trouble selling because it was in Fort Myers where the hurricane.
Oh.
It's fine now. The house is fine, but like insurance, $3,000 a year for, a basic, $3,000 to $4,000 a year for a $500,000 house down there.
It's expensive.
Yeah.
Yeah.
So you got that, that factor.
But that is already an existing situation.
Right.
Yeah.
Right. It's not a new
this is not a new one. So this baking into home prices concept, that to me is just like, what are you talking about?
There's natural disasters, it's been going on for years. So it's just a matter of, do you want to live California where there's a risk of an earthquake? A lot of people do. There's 40 million people.
Seattle,
earthquake.
You bet.
The whole Western United States is at risk of an earthquake.
Or you go down to where my parents are in Oklahoma City, you might have a tornado come through.
Yeah. You got to have a little shelter.
You got to, you get your $5,000 shelter from Home Depot.
Do they got a little shelter?
Yeah.
Do they?
Yeah. Out in front of Lowe's, and you bolt it to your slab concrete.
Okay.
Yeah. You got a 50-50 of surviving, but it's not
50. Woo, roll the dice.
No, they've got tornado shelters there, and they've got, everybody can analyze the weather now so much better. You can see those tornadoes coming.
Yeah.
So you can see those hurricanes coming. They have warned people. You just
get in your helicopter.
Earthquake? Different story.
You can't really see it coming.
No.
Yeah.
No. If we have a big one here in Seattle, San Francisco has a big one, that San Andreas fault. That could cause.
They've been predicting that for a long time.
Yeah. I remember, we'll wrap up here, but I remember doing predictions in 2019. And one of the predictions, like the wildfires, was that there was this crazy virus catching on in China.
Yeah.
And it was called COVID-19.
Oh.
And I remember podcasting on that. And then early 2020.
Yeah.
It just took off.
Like March 2020.
Yeah. But I was like, I think I podcasted on that, and I just absolutely blew it off.
Can you, we had no idea.
We had no idea.
I remember, I want to say it was February of that year, 2020, maybe January. My wife, she had heard about it. And she's into this. She listens to all sorts of stuff,
Yeah.
And she comes home from the hardware store, and she puts these goggles on and a mask, and she's like, "The China virus is coming."
Yeah.
And this is like literally 6 weeks before it landed.
Yeah.
And she's
it was mid-March in Kirkland.
Yeah.
Where we had all the Life Center or whatever that was, had all the deaths.
Yeah.
That was the first.
Yeah.
That was March of 2019.
So this was like January 2020 in Whitefish, Montana.
Mm.
Yeah.
Wild.
Yeah.
It's wild to think people lost their jobs over not getting the jab.
They lost economic devastation. They lost restaurants, businesses shut down. State of Washington, California, super strict.
Yeah.
Shut down these businesses, and they've never recovered. Never.
Yeah. Yeah. So let's hope for 2025, survive till 25. We're there. Let's hope for a better 2025.
Yeah. And, I think it'll be better. It's just not going to be landslide better.
No. The way I see it is, when you're coming off of all-time lows, you got really nowhere to go but up.
Yeah.
Right?
Yeah. And since late 2022, it's been a slow increase up.
And we've had some dips. We've had some dips back down.
We have.
Yeah.
Yeah. You got to work hard, man. I mean, it's hard it's not easy
a grind.
anymore. It's a grind.
And that's why so many people have left not only the appraisal industry, mortgage industry, real estate industry. But if you can hang in there, you will be rewarded, because you'll be one of the last men standing or women standing.
That's right.
So, well, Dan, thanks so much for coming on and sharing your insight on mortgages. You and I've we've been doing business forever, and I always appreciate your insight and your,
two old dogs talking real estate and mortgages. Thanks for having me.
That's what we're doing. All right. Thanks again for watching. We'll catch up in the next one. Bye for now.